It's Brian Preston, the Money Guy.
This next question is from Sergio. This is from YouTube. Sergio says, if you're in the 32% to 35% bracket, is it better to just fund regular 401k versus Roth 401k? So how can, if he's in the 32 to 35, how can we help Sergio decide which one to fund? And then maybe if someone's not in that bracket, how would they decide?
Yeah, I mean, always when somebody's trying to figure out, do I do traditional, do I do Roth? You have to answer a few questions. Mm-hmm. You have to ask yourself, how old am I? What will the tax environment be like when I retire? And do I think tax rates are going up or down? Just a few reading the tea leaf moments. I mean, got a lot of debt in the United States. I think the whole world has a lot of debt right now. So that's probably going to lend itself to higher tax rates in the long term. But then the optimistic side of me is like, man, but young folks, they have the ability for compounding growth where your money could be tax-free by putting in that Roth. That's a really powerful thing. So you have to balance those two things that are in conflict. Yep, that's right. Elbow just fell right off. There's two things that are in conflict there that you have to balance. And we've tried to give guidance in the fact that I always think about when you retire, usually you can manipulate legally, meaning you're not cheating your taxes. You're just structuring your taxes where you can minimize to your tax bill as much as possible. In retirement, it gets easier because you don't have your peak earning years. Mm-hmm. You can choose how much you want to pull out of your retirement accounts. You might have some after-tax money that's not going to have taxes. You might have some Roth money. So you can figure out what you want your income to be, and you legally manipulate the tax code. If you're that type of person, maybe you can get your rates down below 25% in retirement. And that's that situation. Yeah, I think somebody who's paying 32 to 35%, you're going to probably like having the traditional savings, so you get the tax deduction now, and then hopefully can manipulate your taxes lower when you're retired. Where it's gray zone, so anybody who's young and makes under 25, pays under 25% taxes, no brainer. Go ahead and do the Roth.
Yeah,
I think people who make between 25 to 30%, effective taxes. It's kind of gray zone. That greater than 30%, which is where Sergio is, yeah, that's the ones I think that game it and see if you can take advantage of a situation there.
Now, what I love, and Sergio, you specifically asked about 401k, and in most circumstances, you didn't make a decision one way or the other, either Roth or pre-tax. I mean, maybe you split them if you're in that 25 to 30% range, but we don't love the idea of only building pre-tax, only building Roth. We want you to do both, right? Yeah. So maybe you max out your pre-tax 401k, but then you also max out your Roth IRA, or maybe you do backdoor Roth. So that way you can build up both of those tax buckets. Because maybe you're a really high income earner now and you say, you know what, my lifestyle has got accustomed to this. Even when I retire, I still want to live this kind of lifestyle. Well, even if you still live that kind of lifestyle, but you've built all three of your tax buckets well, you could still be in a lower tax bracket because you get to control your tax situation based on where you pull your dollars from. So so long as you can control it, we really like the idea of building both pre-tax and Roth assets wherever you can.
Yeah, and primarily through it, because if you're in the 32 to 35% tax bracket, you're probably not able to do traditional Roth contributions, but you can look into, see if you have the right account structure to where you can do a Roth conversion strategy.
Love it.